Hi, it's James from Veritas. Thanks for taking my question. Could you, you mentioned in the beginning that you're sort of riding this wave of privacy concerns and, you know, particularly now that third-party cookies are going away. Could you please explain how your product really helps organisations that are struggling from the loss of information that used to come from the third-party cookies?
Yeah, absolutely. Great question. We get this all the time, actually. And what's really interesting is, you know, it hasn't been recent that this has started, right? It's been coming for a while. So there's been quite a few, especially the big brands and the big advertisers, there's been quite a few motions being made by them to shift how they work, right? So the third-party deprecation of cookies is 100% impacted digital advertising. There's no if, buts or maybes. Products for us, and we actually say this with Wondrous, you don't need first-party data. You don't need identifiable first-party data, I should say. You definitely need first-party data. So there are mechanisms and security protocols that we can put in place that means that customers can still segment the data so our clients can segment the data on their customers and then utilise those in ad tech because of the changes that the ad tech systems have been making. Now, there's a whole raft of things that are coming along in the pipeline as well that we're sort of at the forefront of as well and making sure we're staying on top of. There's a few, and I think one of the biggest things that's going to be changing in the next little while, and there's a few that are starting to be released, is what's called data clean rooms. So data clean rooms is where I can sit my data directly next to the advertising businesses' data, such as Google or Facebook or the trade desk, and in a privacy-safe way compare the two, so that then we can get a match and say, well, this customer is high value to me, please put this particular message in front of them. And so there's changes that are coming down the line as well. On the flip side of that, when we help support other customers, help support our customers on the ad tech side of things, we've got ways that we can analyse data that's already there to be able to highlight the impact to third-party cookies on their business's advertising, which then helps us strengthen their first-party data strategies. Does that answer your question?
Yeah, maybe this is one for Matt. We heard from Elaine that she sort of summarised the value proposition for her. It was like collect data, organise it, connect it, and then sort of target their customers. Can you just elaborate on the connect part, just to sort of explore that a little bit?
Yeah, absolutely. Don't steal the thunder from my demo, Jane says. Identity resolution is really the key to that. So understanding, and the way that I like to look at it is, imagine a human body, right? And your customers are parts of the human body. The customer's data is parts of the human body, right? And when they start to come together, they form a whole. Because you can't have a body with just skin. You can't have a body with just organs. And that's kind of how we like to think about it. So over time, we work with businesses to understand the journey that a customer goes on with them and understand how people are identified within those steps of that journey. Then we work at connecting the data sets up together. Now, there's some seriously common threads through a lot of identity. Hashed emails, for instance, everyone uses a particular email, so a very common way to sort of identify a person is through a hashed email. So if you're interfacing as a user with a website, you might have a login, you've got a hashed email, you use that, then you might have another identifier which ties you back to the CRM system, that then ties you up to another maybe transactional system. Once we centralise the data, we're in a position to do identity resolution on that. And we can start to stitch those together. Wondrous really empowers that and is very flexible in the way that you can kind of start to stitch things together. And what we can also do is do that incrementally. So customers don't have to boil the ocean. We can start small and build up. So it can start from one or two identifiers, and then we can start adding more and more in and start joining it together over time, so you get that more complete picture of a customer. It is 100% key and underpins everything else beyond that.
Thank you. I'm mildly worried about what my profile might look like with all the online shopping I do. But any other questions from the audience?
Hello, my name's Adam Beasley. I'm from Smarter Capital.
Yeah, we've got you.
Okay, great,
Yeah.
thanks. I just suppose just going to the point of this degradation, is that the word you were using in terms of the third-party cookies? What imperative is industry feeling? Like the potential customers that you're talking to, what imperative are they seeing to move earlier on this than later?
Very good question. It's a very mixed reaction. Those that are what we call digital maturity, a high level of digital maturity, are moving now. So the OFX of the world. Others are head in the sand, hoping that it won't happen for much longer. And unfortunately, because of some of the delayed deadlines, that is breeding a little bit of reluctance to move early. But what we're seeing now is there's enough of those tailwinds pushing people along and understanding that actually this is going to start affecting me now. So in particular, things like the iOS updates from Apple, where you're seeing a significant reduction in the ability to track across apps. A lot of the other browsers like Firefox who have started doing it as well. So now that it's starting to actually impact campaigns, people are starting to move with a little bit more pace. Those people that are dealing with places like UK and GDPR as well, they're also a little bit ahead of the game because they've already seen how much data you will potentially miss if you don't do it well, and it can be quite detrimental to your ability to track your campaign success.
Yeah, thanks. Matt, another one, like when you put up the subway map and you talked through the land and expand strategy, you can sort of land on any of those and sort of expand with the customer. Just from a product perspective, when you've got so much opportunity to, develop the product, how do you kind of focus the organisation into what XPON's going to be known for as doing well, and then what you partner with others for, and just how does that, manifest itself?
Great question. Look, prioritising the product roadmap is very focused on customer need. But what I want to say is that everything throughout that whole thing is underpinned by data. So if we're doing the right thing by enabling marketers to be able to collect it, centralise it, identify it, and then utilise it, which is a really important part of it all, then that's really what we want to be focused on. Yeah. So we might not have to build all the tools in the world to be able to enable people to create great digital experiences. We've already got a fantastic one in Holoscribe, but there's a slew of others as well. So that's where as well that fifth pillar in our growth strategy comes into play, where the more things that we can integrate with and empower the marketers and the customer experience professionals with data to be able to do better by their customers, then that's really our strategy from a roadmap perspective and prioritisation.
Yeah, hi. It's just around the concept of the first-party data strategies. Could you just elaborate a little bit more on what that actually means? Sorry, naive question, but yeah.
What does first-party data strategy mean? So there's a couple of things when we talk about first-party data. So one, if we all acknowledge that first-party data is the competitive advantage that companies will need moving forward, which largely the industry does. And then we talk about why first-party data is important. We talk about context and relevance. So context is how and where is the data collected and with what permission was it collected with. And that's super important, especially when you talk about privacy and security. So you need to know how it was collected, what it was collected for, and what consent was given to you by consumers, right? So that's hugely valuable. And then the second is relevance, which is if you're using third-party data, you're quite often inferring interest. This person shopped at this store and therefore they should be interested in what I do. Whereas first-party data, there's a direct relationship with you and your store. So the relevance is I know this person came into my store, came to my website, engaged with my product, engaged with my staff. So really first-party data, the strategy around it is collecting relevant data with the right consent from all of your owned assets. And when we talk about owned assets, it's websites, social media, in-store. So anything that you as an individual business own, and that data then becomes exclusive to you. And that exclusivity is super important, again, because that's the competitive advantage. So the first-party data strategy and what we work with our clients on is how do we capture the best possible data from as many sources we can, consolidate and unify them into a single customer record, and then leverage. And leverage is the most important thing. If you were not delivering value, we won't sustain that relationship. And too often, data is about collecting and not enough about leveraging. So the collecting is one thing, but if you're not leveraging it, if you're not seeing value, then you won't continue down that track.
I might just add one sort of follow-on question from that, which is how do you track and measure whether the data is being effectively leveraged or not, whether that's for you, Simon, or for Jen?
Within XPON, or as just in the industry,
how
generally speaking?
How does a customer measure that they're leveraging their data properly? How do you guys advise them to, kind of tweak?
Sure. Well, what we've from the earlier question, if we don't get that first-party data strategy correct, as Simon earlier mentioned, even marketing acquisition campaigns to try and get new customers will fall off a cliff as tech providers and browsers and others continue to put pressure on that third-party cookie and our access to use it in marketing. But on the other side, where Elaine had been speaking about the customer experience and that full journey, customers now don't have to be as loyal because we have access to so many other choices and so many other digital marketers coming to us with their products. So attrition is a real and apparent risk when you don't get it right.
Right, thank you. Walking with your feet, voting with your feet. Excellent. Leanne, I know we haven't given you the chance to say much, but you've got the most exciting session of the day coming up after the tea break, which is all around break even. So stay tuned. I might kick off with one of my own, which is, so I got an email from Medibank the other day. And I'd got one a few weeks ago from Optus. Pretty good. So how have those events, so Optus, Woolworths, Medibank, etc., created demand for Wondrous? Perhaps Matt Daniels, if we can put that to you.
Sure. Great question. Look, as I noted earlier, that awareness and all of these events that are in the media only drive all of those changes that are occurring. And we're seeing that now, right, with the Australian legislation. They're tightening up bits and pieces when it comes to financial reporting. They're doing things like increasing the fines for individual businesses as well, has just come in late last week. And so how does it change us as well as a business? Not a great deal, because as I've noted earlier, we can, from a Wondrous product perspective, it can still shine without having that personally identifiable information, which really helps businesses to reduce their risk in using tools like this and leveraging first-party data in the ways that we recommend customers use first-party data. And the other side of that is the operational side of it. So Wondrous is actually ISO 27001 certified, which is probably one of the highest standards when it comes to information security. And so you pop that in front of a customer and they're a lot less concerned, I should say, about it. And when I talk to customers, when we talk to customers and talk about that demo and show that demo and say, hey, look at all the controls that you've got. And also you don't need to use personally identifiable information in the platform to gain the value from the first-party data that you already have. All of a sudden, it's a super compelling story, right? And I've even had a customer say to me, just the controls from a security standpoint, plus the ability for us to leverage the tool in the way that we were previously doing it manually, is enough to justify us ramping our operations up through Wondrous. So it's really, really amazing to hear that played back to us. As far as demand is concerned, we get these conversations all the time, right? And even in the UK, where the breaches aren't quite as prevalent as the ones that we've seen recently in Australia, there's certainly changes happening in legislation. So there's even conversations there about, how are we going to be able to address these changes in GDPR? Because GDPR in the UK is actually having a little bit of a rework as well at the moment. So it's everywhere. It's not just this region that it's facing.
Just wondering, we spoke a lot about first-party data as a catalyst for new business, new customers coming on board. Is the more traditional business of like Google Cloud implementation, Google Marketing Platform implementation, are they still also catalysts for winning new business?
Yeah, 100%. So we've just recently and are still going through a period where Google has announced that they're changing their analytics platform. So they're going from Universal Analytics to GA4. So they're deprecating their old analytics platform, which means you now have less than a year before that's gone. So we have just gone through a period of dealing with a whole bunch of leads from Google with partners that need their analytics platform upgraded. So that is when we've talked before about, do you always have to go through the blueprint? No, that is a great example of here is a very clear use case as to what they need, and we're selling you a GA4 implementation, off you go, and then we can start the relation that way. And all of the other stacks have a similar type of trigger points. You know, a new customer is intrigued about analytics or about GMP or about DV360, and they might come to us with that specific request, and then we will still take that opportunity to try and go through that understanding of what their true needs are, so we can do the expand later.
Jen, something to add?
One of the visual aids I like to use quite often when talking externally about what we do and where we meet customers is that flywheel diagram that's recurred throughout the presentation. So often I use it to kind of map out the various entry points through which somebody can build a relationship or establish a relationship with XPON. So we could be presented almost like a GP. We could be presented with any number of reported symptoms across a marketer's value chain or customer data problem. We know full well that there is a holistic, to use the metaphor of the whole human and all of the systems playing together better, there's a broader health discussion for a customer's digital organization. But again, the flywheel is where we can be a catalyst and just enter in a relationship with at any point.
Jules from Shaw's. Leanne, I'm going to ask the financial question. Could you just clarify with those metrics around revenue per head and gross profit per head, are they based off total headcount or like some sub-segment of the business, or is that sort of what you're trying to communicate in terms of those numbers times your existing headcount to get to the figures you're targeting?
That's right. It's using the Thank you. That's right. It's using the Q1 FY23 annualize the revenue divided by the headcount that we have for this quarter, which is 141. Thank you.
Matt, just around other providers in the space, like obviously you've got these institutions that are coming to you and saying, you know, we want to move and we want to move now. Are they talking to other people? Is there a beauty parade, or are you the only girl to dance with at the dance?
Good question. I'd be pretty disappointed if I was the only girl at the dance, that's for sure. No, there is other competitors. We feel like we're very uniquely positioned because we have this very holistic approach. I think what we find, depending on one of those train stops that customers are coming in to talk to us about, the competitor set will be slightly different. But certainly what we find is there's no other competitor that can provide that full stack solution like we can. And our loss rate to competitors is very, very low. I think Andrew Ross may have asked that question earlier to Chris as well. Typically, if we lose to a competitor, it's because they were never going to buy from us in the first place and they were just making up numbers for an RFP or an RFQ. And specifically, it's typically that would lose to a big global vendor like a Salesforce or someone like that, because the customer is of a size and a scale that they were always going to buy from a Salesforce or an Adobe anyway.
Oh, yep.
Sorry, Matt, just as a follow-up to that, so the RFP would be...
request for proposal or request for
so just would that be typically the way that when you're going through the sales process? Is it 100% of times that you're in an RFP situation, or you're winning some of these just on a negotiated basis? How's it work?
Yeah, most of them are negotiated basis. It's typically those bigger customers that have a procurement requirement that they need to go to market and get at least 3 different proposals where that comes up. Typically what we'll find with a lot of the referrals that we get from Google is there may be us and one other partner that Google put in front of the customer. Sometimes it's just us, but it's typically just a negotiated process. It's not a formal RFP process that we go through.
I feel like Simon might have something to add.
No, look, I think Matt covered it pretty well. Most of the time we're going in engagement from the blueprint perspective or a particular problem. We might end up helping write an RFP or an RFI based on the maturity, the output of the maturity survey. And typically it's those larger big, enterprise that take us down the RFP, RFQ route. So yeah, all of those organisations you would expect, it's pretty much that list.
Lots of RF-related acronyms around. Okay, I've got an ARR question. So it's been growing fairly consistently quarter on quarter for the last 5 quarters. And you've onboarded a lot of extra sales capacity lately. So when should we expect to see the growth in ARR in dollar terms accelerate?
Good question. So a couple of things is from a strategic point of view. Our primary focus is selling our own IP, which is where the largest amount of ARR is for us. So that's something that we continue to build on. The team that we've just onboarded as well is also upskilling. So I would expect that we'll start seeing some of that growth and acceleration in the next couple of quarters. But realistically, it is an enterprise sales process. It does take time to onboard clients. So it will be aligned with that sort of sales process.
And which customer segments would you think are growing the fastest?
Customer segment is always a really tricky question because it's not any one particular segment. It's more around digital maturity and awareness. So what we find is, certainly at the moment, those customers that are most exposed to the risks around data security and privacy are certainly the best opportunity and the lowest hanging fruit. So, for example, financial services. But we also have a lot of activity at the moment around publishers who their own product is being significantly damaged by the reduction of third-party cookies. So, in that case, we have a solution to help them commercialise their own model. But I think anyone who is dealing in customer data, anyone who is looking to grow and have a competitive advantage fits within our wheelhouse. It then becomes a question of at what point are they within their digital maturity, so that what we offer and how we work is relevant to them, and we'll get the buy-in that we need to drive that change.
Thank you. Just a question back to one of my favourite topics, cash flow break-even. So are there, and maybe Matt Foreman, this might be one for you, are there any circumstances or opportunities that would make you push that target either way?
I don't think we want to bring it forward publicly, that's for sure. But yeah, look, I think like Simon's just articulated, like we've just built a whole heap of capacity in our sales team. That's yet to become fully productive. So, we're looking at our sales cycle with our enterprise customers. Chris outlined before, it's 6 to 9 months. The range really is 3 to 12 months for most customers, and average is a bit of a misnomer in this case because there is a fairly broad range. So, our assumptions are that, the back half of this year, we should really start to see those sales ARR numbers start to increase from a dollar perspective. And that's going to be one of the catalysts to drive to that cash flow break even. If that ramp takes a little bit longer, well, then that would be the only thing that would, possibly negate that. But we're very committed to delivering on what we've stated publicly. And at this stage, our pipeline's very healthy, and we've got no reason to have any concerns that we're not going to do what we said we were going to do.
Thanks, Matt. Questions from the audience?
I'm going to ask another one, sorry, Matt, but just in terms of getting to that profitability point, there's a lot of inflationary pressures in the economy at the moment, and in different sectors, wage inflation is becoming more of an issue. How's it impacting you? Obviously, a lot of new hires. I'd imagine that they're reasonably specialised sales force in terms of the technology stack that they're selling. And then the flip side of that, just what degree of pricing power do you have? Thank you.
Yeah, excellent. Thanks for that question. On the cost side of it, I think we're feeling comfortable that we're within the benchmark target range as far as the salaries go for our team. Obviously, this year with inflation and the tech skills shortage as well, it has put pressure on people's salaries in an upward capacity, and we've sort of had to meet the market there. So there has been some upward pressure on that side. I think we've more than counteracted it though on the revenue side. I think the number of customers we've been able to, when we've renewed contracts or gone back to the negotiating table, been able to renegotiate the contracts in a different way and really get an uplift in our pricing, but more importantly, get an uplift in our gross margin. You can see that in last quarter's result, where it's 69% quarter. So that's a fairly big jump from the previous quarter as well. So some of that was driven by efficiency and automation and product mix, selling more software licenses, and some of that was driven by pricing through contract negotiation as well.
What are the areas of product development that you're focused on?
What are the areas of product development we're focused on? Look, what's really interesting is, as I noted before, all of that underpinning data is really where we're focusing a lot of our efforts. And Matt noted a moment ago as well, there's also that sort of automation side of it. So if we can develop sort of micro tools and products that can really scale our GP and make our team more efficient, we've also got that in our minds as well. Now, if those tools and things become systems that we can then productize and on-sell, then that's also something that we're sort of keeping our eye on. And to give you an understanding, Wondrous was one of those tools back in the day. We built that as a rapid way of deploying data pipelines on Google Cloud, and then it became productized into Wondrous, which is, we've seen it proven time and time again via sort of strategic enablement as services, and now people can log in and utilize it and things like that. So that's kind of our general approach to it. As far as kind of, I guess, the roadmap is concerned as well for Wondrous, so what are we focusing on specifically for Wondrous? That's driven by client feedback and need at the moment, which is really lovely to sort of get all of that feedback in and go, well, okay, here's an interesting thing to build. But the flip side of that is it's always focused on that sort of fifth strategic pillar of our growth strategy, which is how do we grow the ecosystem for Wondrous? So external integrations with new DSPs, what's going on from a sort of macro factor when it comes to security and privacy, so integrating with privacy collection and consent mechanisms, and that's kind of guiding our direction from a Wondrous product perspective. What can we integrate to scale up not only the technical side of things and the functionality, but also what are the integrations we can make that can help scale our distribution strategies too? So what are the partnerships we can look at? And there's some really strategic decision making we've got when it comes to whether we're going to integrate with platform A versus platform B.
Is growth by acquisition entirely off the table? Question mark. Matt Foreman.
Look, I'll never ever say never. I think I mentioned earlier though, we don't feel it's the right time to be focused on that right now. I think, obviously we're focused on the organic growth, cash flow break even. We're really, really keen and committed to demonstrate to the market that we can grow our way to profitability, and we're not going to cut our way from a cost-cutting perspective to get to profitability and cash flow break even. We're demonstrating that we can do that. Obviously, the share price at the moment as well, I'd like to see it always higher before we started to entertain more M&A conversations as well. So I think, we'll keep an ear to the ground. If any strategic opportunities pop up, then we'll definitely look at it on a case-by-case basis, but it's not something that we're obsessing about right now. I think the time's right, back on the cards, but not right now.
Thanks,
Matt, we've heard digital maturity a couple of times when you're talking about your customers. If you were to, and I know each customer is different, but if you were to sort of create a persona that we should think about as a target XPON customer, what would that look like from the scale of the marketing team, or just where you play really well with the customer, where you can add a lot of value?
Was that to me, Jules?
Yes.
Okay. Yeah, I actually think Simon could answer it better than I, so if you want to have a crack, Simon, I guess.
Handball. Very good question. So we have just recently recently published our latest digital maturity survey, but I might refer to the old one because it's there's probably broader industry vernacular around it. So generally, when you look at digital maturity, the market sort of categorise people as either nascent, emerging, connected, and multi-moment. Our sweet spot has been in that emerging space. So they've started to get an understanding of digital maturity. They've got some tools in place, but they're very technology driven. There's not a lot of strategy behind what they're doing. They're very reactive, but they understand that there's opportunity. So that's where we've sort of found the best opportunity. It's where we can add the most value and do so quickly. As an example, that would be where we engaged OFX. OFX was at that point when we engaged with them. If we look at University of Sancho Coast, probably even a little bit earlier than that, they were probably just coming out of nascent. If we take another example like Sun Super, again, they're probably in that area of nascent or emerging and trying to develop out. So again, it's really hard to say it's 25 people when it's X number. It really comes down to what their attitude is, what the internal buy-in from senior stakeholders is, the type of attitude they have to marketing.
Was that a little bit of flavour to that, if I may? What we also see is sometimes businesses might think that they're in a different place, and that's where when we do the survey, there's really surprising differences between different teams. And what that helps us do is break down the barriers between the various stakeholders, because the things that we want to do has a lot of different stakeholders, right? So, the marketing team might think they're, whiz bang and doing all the kinds of things that they think is awesome, and then the data team might think completely opposite, or vice versa, right? So what we then do is we go down and we break down those silos and we talk about that kind of stuff. So while we get averages of, someone maybe, just coming out of nascent or something like that you might have a data team. And what's really interesting about that is we can start the conversation about breaking down those silos within a business. Seeing that happen in OFX was astounding. When Elaine moved over to actually start owning product, the shift in their whole business was incredible. All of a sudden data and IT and everybody was rallying behind the customer need, and which they knew was going to drive the business need, right, and grow the business in a sustainable way. So it's really, it's a really great tool for us, much more broadly than just, hey, this is the target.
It's exciting. Matt Foreman, we'll wrap up formally in a minute, but perhaps you might just want to provide some kind of closing remarks around where you see things headed and how you're feeling at the moment, and then we'll let everybody free.
Excellent. Thank you, everybody. Feeling lonely on my own here, but wish I was there. I've got a lot of FOMO right now. Look, we're really excited. Obviously, we've been able to consistently demonstrate very consistent performance quarter on quarter. I think we've outlined today to the market, how we're going to get to that operating leverage. We're going to combine continued increases in that gross profit margin that we've been demonstrated that we can do. We've been increasing that ARPU, that average revenue per customer as well. And that's a number that we may not have published directly, but it's pretty easy to calculate from the unit economics. And the same with that revenue per head and gross profit per head number. It's not a number that we previously published, but it's very easy to calculate from the information that we disclose publicly. So, we think with all that capacity that's still in the business that we get to fully productive, the increase in the margin and the increase in the average revenue per customer, we see a very, very clear path to delivering on what we promised we would do. I know I'm very confident. I know the team's very confident, and it's up to us to go and execute right now. So I think if I was going to leave the audience with anything, that would be the single message.
Thank you. Actually, do you know what? Something that you just said reminded me that I had a final question. Sorry. Which was for Leanne. If there was one single takeaway for investors to leave here with today, what would it be? Microphone.
That we are committed to cash flow break-even full year FY24, and we have the headroom to continue to grow our business to get us there. Thank you.
Thank you. Sorry, Matt. That was important. Okay, so that concludes today's inaugural XPON Investor Day. We hope that you've learnt something and you kind of understand the business better. This is a long game, so love to keep educating you and keep in touch. Next sort of results are out by the end of January, Q2 FY23. But please, if you wouldn't mind just joining me in thanking all of our speakers today with a round of applause.